All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing that I want to talk about is non-fungible token sales begin to dive. NFT interest declines. And finance author highlights NFT oversupply. So NFTs can be a lot of things and can represent various different things. But half of this particular episode today is pretty much going to be NFT art, because it's absolutely getting very ridiculous to say the least. So in 2021, non-fungible tokens have been all the rage, and the industry has grown very popular during the last few months. Throughout March 7th through the 13th, 2021, the term NFT searched on Google in the US touched an all-time high, reaching 100 on Google Trends, so basically maximum. Since then, queries for NFTs have slid in the United States to 92 the week after, 95 during the last week. So worldwide queries for the term NFT on Google went from a score of 100 to 95. So not too big of a difference here, but basically NFT sales, the value of them, and everything else is starting to slip downwards. And this is nothing particularly new in the crypto world, as things pop up all the time that are new, that people make a lot of money with, and then people realize that it was simply too easy to do that. Now, I was talking about this in a live stream last night. So the entire term non-fungible token, according to GT data, shows the score recently dropped from a 100 to an 89. So basically numbers are going down. And my whole take on this whole deal is that there, especially with the NFT art, now, there's a huge difference between a very popular artist like Banksy or something along those lines, and you make an NFT out of that, and sure, it's going to be worth a lot of money because basically the guy can take a poop in a glass jar, and it's going to be worth $100,000 or $1 million. So that is totally one end of the spectrum, like major artists. And then on the other end of the spectrum, we have JPEGs, basically JPEGs. So the Bad Luck Brian meme sold for something like $36,000. Now, this is just a JPEG that you can Google and then download to your computer, apply to the blockchain, and then somehow sell it for $36,000. Now, is it likely that somebody's going to turn around and buy that for maybe $40,000 or $50,000? Very, very unlikely in my opinion. So it's sort of a seller's market, I will admit that, but anybody who buys these JPEG NFTs is probably not going to see their profit. Now, maybe the very first wave, considering it was like the first of their kind, etc., might be a little bit popular, but sooner or later people are going to realize that there isn't enough honest work in this. And what I mean by that is like a psychological term, honest work, in the sense that basically, you can just Google any meme and then throw it onto an NFT website and hope that it sells for an outrageous amount of money. Okay, great, but that means that literally everybody in the world can try and attempt to do that. And when anybody can just do that willy-nilly on the spot, it's simply not honest work. In contrast to something like proof of work with Bitcoin, where you need quintillions of hashes in order to find the correct hash to solve a block of Bitcoin. And then when you look at that block in the Blockchain Explorer, you know, wow, somebody had to attempt that quintillions of times to actually find that, and therefore it was basically impossible to just think up on the spot. Nobody could have in the world could have just thought up that on the spot. Obviously, it had to have taken a lot of work to do that, thus proof of work. So the NFT thing is definitely going downhill for sure. Now, NFTs do not just mean art, so I'm really just sticking to the art here. So another person apparently agrees with me. Highest valued living painter, David Hockney. NFTs are for crooks and swindlers. The sale of Beeple's artwork for $69.3 million last month made Beeple the third most valuable living artist behind Jeff Koons and David Hockney. Hockney, who holds the world for the highest sale of a work by a living artist, is no fan of NFTs. I think it's an ICS, he said when asked about the phenomenon. International crooks and swindlers. Hockney said he has read about NFTs, but is not interested. Why is it? What is it that they're owning? I don't really know. Now, he might not know blockchain too well, but even still, if you bought the Bad Luck Brian meme for $36,000, what do you own exactly, considering that everybody in the world can just Google it? It's not like you bought a Picasso painting and put it inside of your mansion or something like that, and you are truly the only one with that. You're the only one with it on the blockchain, but anybody can just download the picture. You could argue the same thing about a Picasso painting, and that you could just download the picture off the internet and then print it out and put it on your wall, but it's not quite the actual real thing. It just doesn't really make sense to me. NFTs in general do, but JPEGs, they certainly don't. So Hockney83 couldn't care less about NFTs. I'm not looking for money, he shrugged, even though he's the #1 world's selling artist. But fair enough. Understandably, Hockney's best-known artwork, Portrait of an Artist, Pool with Two Figures, sold in 2018 at auction for a record $90.3 million, which one could argue is also a little crazy in itself, but at least you own a painting and not a JPEG on the blockchain. He doesn't think NFTs make much sense at all. Things can get lost in the computer, can't they? So apparently he does not know anything about blockchain. But still, fair enough. Even if you did know about blockchain, you still bought a JPEG for $36,000. Bad luck, Brian? You literally bought it for $36,000. And the idea is that maybe the first few people, I get why people buy super expensive art and it always sells more. Like the Picasso painting might sell for $80,000 and then $100,000 a few years later when somebody puts it up for auction, and then $200,000, $300,000, and then it goes up to $1 million, right? Because every buyer is going to want to sell it for more, and then that buyer is going to want to buy it so that they're the only one in the world with that particular painting. But I really, really doubt these meme JPEG NFTs are going to go for more than $36,000. I find it very hard to believe. But moving on from that, from the 83-year-old artist that doesn't know anything about blockchain, but still somewhat has a valid point there. Overly Attached Girlfriend NFT sells for $411,000. So ask yourself, who in the world is going to rebuy this later for more than $411,000. I really think that people are buying these for an outrageous price so that they can claim and that they can have the bragging rights that they paid that much money. I think it's that way with art sometimes in the world, too. You're a rich guy, you got a mansion or something like that, right? You're a big businessman or maybe even a cartel drug lord. Hey, who knows, right? And you bought the painting, and now you get to brag, like, look how much I bought this painting for. Like, everybody's going to be like, whoa, guy must have so much money, right? So when you buy these, I think it's just for the bragging rights, and just so you can say, I'm the first person in the world that paid $411,000 for an NFT. Like, look at me. So you get your 15 minutes of fame, but you're out $411,000, and I really doubt you're going to find someone who's going to flip that and want to buy $500,000 for it. I highly, highly doubt it. But who knows? Probably wrong, because crypto. So Lena Morris, the internet celebrity who became known for her overly attached girlfriend meme, went viral today. She sold a tokenized version of the meme for 200 Ethereum, $411,000. The buyer of the meme NFT is 3F Music, a Dubai-based music studio, which bought a JPEG, doesn't make any sense, which bought New York Times' NFT for $560,000 last Thursday. So basically, they've spent over a couple $1 million on blockchain, basically blockchain JPEGs. It's just, who knows? Maybe we'll look back on this video. Somebody's going to look back on this video 3 years from now, just like my videos from 3 years ago when I was talking about day trading and talking about how to buy Bitcoin and various tutorials when Bitcoin was like $5,000 and people were like, oh, wow, Bitcoin, I remember when Bitcoin was $5,000. That's crazy. And people are going to look back on this video and be like, boy, that guy was dead wrong. Now, the overly attached girlfriend is selling for millions of dollars. So you were wrong, MrSotko. But I still feel like I'm right in the fact that you're buying a JPEG on blockchain, and you could have just downloaded it. You know, you could have just downloaded it, right? You could download it. You could print it out. Like, I'll print it out for you. I'll tell you what. I'll print out 15 of the same memes for you today, and I will express ship them for you for half the price. Boom, 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 deal, right? Half the price. I'll even fly to Dubai and then put them up on your walls with stickers and then fly back for half the price, right? That's a super good deal. That's the MrSotko guarantee. Or you can have your JPEG on a blockchain, whatever. So that's why I feel like the whole art NFT thing, there's two spectrums of it. There's one where there's some seriously large artists, super huge artists, that are selling their NFT works for a lot of money. And they're already famous, and everything that they produce already is very famous and very expensive anyway. So it totally makes sense. But selling JPEGs is the totally opposite side of the spectrum. Literally, just Google Bad Luck Brian and then right click save image as a JPEG and then put it on the blockchain. And that's why there is no honest work in terms of the art and going into NFTs. Now, like crypto kitties and various other things like that as NFTs, kind of a different story, but these JPEGs definitely not going to last. It's a seller's market. If you manage to sell one for $36,000, good for you, but bad for the buyer, because you're going to be hard pressed to sell somebody a JPEG for $50,000 for profit on that. So moving on here, Microsoft patented brainwaves crypto mining in 2020. Will it ever become real? So this is a real thing. They actually made a patent on this. There's plenty of articles about this. This isn't just like a one-off article. And basically, it's a little bit creepy. So you want to start mining, but don't have enough money to buy an ASIC or the latest GPU to mine your favorite proof-of-work crypto? Don't worry. Soon, you'll be able to mine cryptocurrencies with the power of your mind, thanks to Microsoft. Oh, thank you, Microsoft. You guys are such altruists. And no, it's not an April Fool's Day joke. According to the documents from the World Intellectual Property Organization, Microsoft has been working for at least 1 year to develop a system that harnesses the energy of the human body and uses it to mine cryptocurrencies, which kind of sounds like the Matrix. The patent called cryptocurrency system using body activity data. They really got to work on that name. Once again, it's called, quote, cryptocurrency system using body activity data. Whoever made up that, fire him. Get him out of here. Get him out of here. I don't want you around anymore. That is the worst name I've ever heard. You guys could have thought of something better than that. You know what I'll call it? Let's call it Titan Project. Boom. Way better, right? Like it took me 0.1 second to think of that. That the human body generates energy that is lost with each natural physical body motion or function. Microsoft's idea is to use precisely this energy and put it to productive use, Matrix style, instead of massive computation work required by some conventional cryptocurrency systems. Data generated based on the body activity of the user can be proof of work, and therefore a user can solve the computationally difficult problem unconsciously. So as the Wachowskis, the Matrix, or Wachowskis? I don't know, either way. The mining process involves the user hooking up a number of sensors to different parts of the body to generate a reward when performing some activity, either consciously or unconsciously. Unconsciously sounds really bad. That sounds super bad. But fair enough. For example, the patent explains that the sensors could determine when a person is performing a specific task, such as watching an advertisement or using an internet service. Or you could just use Brave Browser for that, I suppose. When the appropriate stimulus is registered, the mining process could be activated, rewarding the individual with tokens. The report that says that body fluid flow and organ activity and movement could be some examples of bodily functions that could trigger sensors and initiate cryptocurrency mining processes. Yeah. The process looks pretty simple in essence. One of the patent's graphics explained that an external entity generates the conditions for a given task, such as reading a Crypto Potato article in its entirety. Oh, you sellouts! And the person executing the task triggers the sensor, which produces a response recorded in a hash. Here's the problem with this is that, how are you going to increase the hash difficulty over time? And I don't think that's a problem. I think maybe that isn't a problem for this system. I think what this is all about, I basically have it already, is that this is for your data. It's basically like if the service that you're using is free, you are the product. Like Facebook. You don't have to pay a dime to use Facebook. You can just scroll around all you want. But I'll tell you what, go to the Harley Davidson website or something like that, or some kind of Amazon, it doesn't matter, and look for a very specific product like a motorcycle or a spatula or a particular computer or something like that. And then go to Facebook. You're going to get ads for that for sure. For the next few days, you will see an ad for the exact same thing that you were looking at because they basically took your data and sold it around all over the internet, regardless if you flushed your cache, cookies, etc. All that data is now on Facebook. So basically, they use your data to make more money. It's better to know your individual and take all of their data in order to advertise to them than it is to just broadly advertise. Back in the day, it was like, hey, Tide, clothing, wash, whatever, wants to sell their product. So they're going to put it on Facebook and they're going to show it to everybody. But not everybody is interested in Tide. However, the people that just looked up various cleaning products and Tide and stuff like that are going to get those exact ads. And that's much, much better and much more targeted. You save money and you generate more money. And this looks exactly like that's going to be. You're going to hook these little sensors up to you and you're going to get paid in a paltry amount. Kind of similar to Brave browser, to be totally honest. At least they do it in a better way. And you're going to get paid in a paltry token, and it doesn't have to increase the difficulty of any kind of hash or anything like that, because they want more and more and more people. There is going to be no increase in hash. There's going to be no increase in difficulty. They want more people, right? They want to give out more of these because they're going to take your data. They're basically going to watch you watching ads. Are you looking away when the ad turns on? Are your eyes looking away? Is your body movement saying, oh, I don't like this ad, sort of thing? And they're going to make a ton of money from you. So they're going to give you something because you are the product. So, hey, when this comes out, definitely stay away from this. I promise it's not going to be a good idea. Moving on. JP Morgan revises Bitcoin target $230,000. The financial giant is gradually becoming more bullish on Bitcoin and institutional adoption. JP Morgan, in an email note released to clients on Thursday, cited decreasing Bitcoin volatility as a positive for institutional interest in the asset. Remember, JP Morgan, the Jamie Dimon, the guy that basically fudded on Bitcoin for many years, is the one now sending client notes on Bitcoin. Interesting. In an article covering the release by Bloomberg, strategists including Nicholas Panitzeroglu nailed it. Again, slow down the video to 0.5, and I absolutely nailed that name right here. I nailed it. Slow it down. Do it. On the basis of Bitcoin's declining long-term volatility, the strategists revised their Bitcoin price target to align with private market investment in gold. Considering how big the financial investment into gold is, any such crowding out of gold as an alternative currency implies a big upside for Bitcoin over the long term, because gold kind of is falling in price, at least last time I looked, which was probably like a month ago. Mechanically, the Bitcoin price would have to rise to $130,000 to match the total private sector investment in gold, Morgan reportedly said in the email. So, in what has been a landmark year for Bitcoin, the continued support from incumbents in the legacy financial sector is very bullish, with Goldman Sachs and Morgan Stanley both filing to offer products in the space. As time passes and Bitcoin price continues to fly on the back of additional adoption and entrance into the space, expect additional upward price target revisions from JP Morgan and others who have historically remained far too bearish. Matching the private sector investment in gold is just the start, as Wall Street will come to find out. So JP Morgan getting a little bit more bullish on gold, basically sending out letters to their investors talking about Bitcoin now. So a total 180 with JP Morgan, although that did happen a little while ago, but it just goes to show that these big banks now starting to get into Bitcoin one day. There's going to be something fierce going on. Supply crunch incoming. Bitcoin miners stop selling. So once in a great while, Bitcoin miners sort of get together and they stop selling their Bitcoin. And whenever that happens, usually the price of Bitcoin increases quite a bit. And then after it increases quite a bit, of course, they end up selling, which makes total sense because they have to pay off all their bills. But it seems right now is one of those hodling times for Bitcoin miners. Bitcoin continues to consolidate in the high 50,000 area. Meanwhile, its fundamentals are strengthening and seem to point towards a price breakout. Analyst Ali Martinez has shared data from Glassnode to predict the timing for a new BTC price rally. According to the analyst, when the cryptocurrency surpasses the 1 million threshold in the metric entity-adjusted dormancy flow, historically, Bitcoin goes parabolic. Despite Bitcoin's nearly 1,500% increase in a year, it is still below this threshold. Conversely, Martinez stated that when the entity-adjusted dormancy is rejected before surpassing the 1 million threshold, Bitcoin's price experiences a pullback. in 2021. This happened at least twice, back in January and late February. As seen below, the cryptocurrency is close to this zone. So if we pop over that, we should see an increase in the price of Bitcoin as miners are hodling quite a bit. However, I'd like to add a couple of things that Bitcoin really needs. Somebody actually asked me in the live stream yesterday what it's really going to take to go well over $60,000 in Bitcoin. And that's a tough question. Of course, maybe some new company comes along, decides to buy $1.5 billion like Tesla did. Well, that's sure going to be bullish and push up the price. But really, what the cryptocurrency space truly needs right now, and not just necessarily Bitcoin, and the first is a Bitcoin ETF. We absolutely need an American Bitcoin ETF because institutional investors, they don't like Grayscale as much because Grayscale, quite frankly, is a derivatives platform in disguise. You're not really buying Bitcoin, you're buying GBTC. Now, Grayscale does have to hold an equivalent amount of Bitcoin, a relative amount of Bitcoin to their GBTC, but you're really truly not buying Bitcoin through Grayscale, you're buying GBTC. Which they basically said, yeah, we can just slice up GBTC and then sell that to people at a premium rather than selling people straight up the Bitcoin. Why? More profit. Sure, why not? Bitcoin derivatives. It's going to be a thing. It already is. But what we really need is a Bitcoin ETF because institutions really want to buy the actual Bitcoin, but a lot of them don't want to actually hold on to it themselves. So a Bitcoin ETF would essentially be in custody of your Bitcoin. It would be like an exchange, but for institutions. And that would raise the price something fierce. That would be our journey to 100K for sure. Another thing that the cryptocurrency world needs badly to raise the price of basically everything is either sharding, basically Ethereum 2.0, sharding, etc. On Ethereum. Ethereum needs a much, much higher transaction rate currently. The DeFi market would absolutely explode. If you think the exchange, the DeFi exchange volume is high right now, imagine when people aren't paying $30, $40, $50, $100 in fees per transaction, that it'll just absolutely go through the roof. Centralized exchanges will be in big, big trouble when it costs this just 0.5% or 1% to make a transaction on DeFi platforms. Right now, it's just not the case. It's quite expensive indeed. However, there is a big difference between the fees on a DeFi platform and the fees on a centralized exchange. So basically, a centralized exchange usually like something like 0.5%, and so that's relative. So if you paying $1 million, 0.5% of that, if you're paying $10 million, 0.5% of that, so it can really get big. Whereas DeFi is sort of an absolute. They do have a small relative fee. For essentially Uniswap for like the developers, etc., for profit. But really the gas fees are absolute gas fees. So, $80 if you only have $1,000 is a huge fee. But if you're paying $1 million on a DeFi platform, $80 is really not that big of a fee at all. In fact, it might be smaller than just 0.5% any other way. So it depends on how you look at it, but with higher fees like that. But so we either need like sharding or something like that on Ethereum, like Ethereum 2.0, or we need some serious layer 2 solutions for Ethereum, like Uniswap and DeFi platforms. And moving on to CoinMarketCap, some interesting things going on. We're at nearly $2 trillion market cap, yet Bitcoin is still not over $60,000. So basically, everything has been going up. It's sort of alt season right now. Bitcoin has been staying at 50,000, 58,000 to 60,000 briefly, and it's been sort of very mediocre. It's been just staying exactly, almost trading sideways entirely. Ethereum has hit its all-time high over 2,100, and that was a couple days ago or yesterday or so. Cardano is still a little bit wacky here, just trading sideways, not really going anywhere. But some interesting things going on with some other coins as well, such as BitTorrent, up 67% today, now in the 11th spot. And we have some huge explosions in Tron, and various other coins are pumping pretty wild. So it's definitely like an alt season at the moment, or at least a temporary alt season, perhaps an alt weather, to be a little bit more specific. And so an interesting coin market cap today. Quite interesting indeed. Bitcoin basically going nowhere and alts all going up. I don't know if it's alt season, but alt weather has approached. This is my alt weather thing. I don't know if you guys got that. That's alt weather. But that's all I have for you guys today. Make sure you like, subscribe, share the video. That helps me out a lot. My social media in the description below. Give me a follow on those if you get the opportunity to do so. Also, channel memberships are active. Hit the join button down below. You're going to get a cool badge. You look 32% cooler when you comment on the channel when you have your Cool Beans badge. But that's all I have for you guys. And as usual, I'll see you guys next time.